Equity markets in a bit of a slump, but let's turn our attention to the commodity markets. Manisha Gupta joins us to help us out with what's going on there. Manisha.
Thank you for that, Nigel. I'm looking at gold prices because we're trading very close to those all-time highs. Yesterday as well, the closing was near all-time highs, but we haven't been able to breach those kind of levels. Having said that, the decline in Treasury yields to almost 1 week lows has been supportive for the gold prices. We also have seen prices hit an all-time high of 26.85. And, an hour ago, we were trading at 26.84. The prices should come on your screens because we're not too far away from breaking those kind of levels there. The support comes in from the fact that you are looking at safe haven buying in case of gold, and with the 29% of gains that the gold prices have put in for 2024, this is the biggest annual gain in last 14 years that gold prices are giving to you. Well, the support comes in from various factors really. One is the fiscal instability that the global markets are looking at. Second is about the safe haven appeal. Third, it's about the geopolitical tensions that we are looking at. And then it also is about de-dollarization because various global central banks have been buying quite heavily into gold. The US presidential elections in the month of November, well, every time you see that happen, the safe haven comes in case of gold, and we've seen that happen this time around as well. The gold ETF buying has been on the stronger side as well for the past 3 months in the global markets and in past 5 months for the Indian markets as well. For the Indian markets, for the month of September, you saw nearly 1,200 crores of inflows coming in for gold ETFs there. And then the net longs on COMEX are at a 4-year highs. Also, the central bank rate cuts has been another factor which has been supportive. Well, the street has seen a strong support from the fact that there is a rate cut cycle continuing in US, in Europe, also various banks in European markets there. We also have seen China come back with it, Bank of England and European Central Bank. So these are various banks to keep an eye on. As of now, there's a 96% of a probability of a 25 basis point rate cut in the month of November. The street has factored that in. And the weak inflation data in Europe and UK has increased the expectation of rate cuts there. You have Bank of England or other European Central Bank meeting today, and a rate cut from there as well is anticipated. Going forward, there was a CME meeting which says that 29.50 is the kind of level that they're working with by the end of this year in sense of gold prices. And when you look at the international markets, we're looking at very strong gains continuing there as well. 2020 gold prices were at 50,000. This year we've seen 76,000 reach as well. So very strong gains, as you can see, every 5 years, that kind of a jump that we've seen in case of gold prices. Going forward, $2,600 to $3,000 an ounce in this quarter or the first quarter of 2025 is what the various banks are working with. We already are trading at around 26.80 at this point in time. So higher highs is what the street is working with.
Okay, all right. Manisha, thank you very much for that. So commodities in focus with Manisha as always. Coal